welcome to the Closing Beat, everybody. Happy Thursday. Hope you're having a good day here so far. Sort of a busy one around here. We're financial advisors here. We just do a quick fun show here at the end of the day. We call it the Closing Beat to try to help out our customers as well as you guys that like to follow along. Let you know how the stock markets did, give you an update, and hope you enjoy. If you do, maybe you'll hit the subscribe button or thumbs up button or something like that, whatever we're supposed to tell you to do. We're also playing a game. It's called Guess the Dow. Bottom right-hand corner of your page, you can go guess where you think the Dow is going to close next week. Good luck. It's going to be a busy week because you have the Fed coming up as well. So it should be an interesting week, a lot of volatility for that. But you can guess. If you're the closest without going over, we'll send you a $100 gift card. If you're one of our customers, we'll actually just give you $100. Or you can take the gift card. It's up to you. So we'll announce the winner tomorrow. Now tonight we have a class. Every Thursday night we do a class for customers, teach them something new. It's a chance for me to sort of come to them, give them an update, get a little detailed on things that I can't do publicly. And tonight we're going to go over Nasdaq and some of the new upgrades to the platform there, which is our financial planning software that we use. But next week will be by far the best class of the year. We've spent so much time on this. So we get the question a lot, and I always say invest smaller weekly amounts versus monthly. And people go, well, okay, what day of the week or when should I do it? How should we go about this? So we've gone back 20 years and we've taken every single day of data and we've gone through and said, okay, if there is the ability for you to invest weekly versus monthly and the weekly results beat monthly, well, what day? Right? Is it Wednesday beats monthly? Is it Monday beats Monday or monthly? And so we're going to compare and show all that geeky data. See, before when I did the study, I just had to tell people how it was done because I didn't have the capability to share. Now I have the capability to share the results and exact returns through all these different scenarios. So we're going to go through that. Super geeky there. That'll be next Thursday in our class for customers there. You can also see the events that we have on our website there. So really looking forward to that one there next week. All right. Let's get started here. So you got the stock market higher by 48 as far as the Dow goes, 8 on the S&P and 24 on the Nasdaq. Sort of a good day, but it was a lot better until right at the end of the day. What happened last night about 7:30, actually just sitting around here at the shop playing some geeky coding stuff, and we see that President Trump tweets out that they're going to delay tariffs on the remaining $250 billion, the hike. They're going to delay the hike on those tariffs for 2 additional weeks beyond the October 1st deadline in honor of the Chinese celebrating their 70th anniversary of the People's Republic of China anyways. And so sort of a goodwill gesture that helped the markets sort of break above that mental resistance or that 3,000 line that we talked about yesterday, kind of talking about that resistance where we stopped. That got us up and over that, and then you had the ECB come out and say, we're going to continue to do quantitative easing as well. They lowered their deposit rate, I believe, and they're going to look to start purchasing more bonds back in November. So a lot of positive news there. Now, that ECB news would have normally sent our markets higher on their own. We didn't get as much of a pop out of that one if you watch there minute by minute, but that's okay. So that leads to a good day here in the market, and there was one little blip early on in the day where Bloomberg came out with a report that said, there's a goodwill gesture by the U.S., and the U.S. is looking to do some sort of interim trade deal before they work out the big one, and Bloomberg, I don't know where they get their results from. Anyways, the U.S., Washington came out and said, no, that's not true at all. Actually, we're not interested in an interim deal. We want a full deal. And so the market sold off on that news throughout the day. It did recover, but then at the end of the day gave it back up there. Economic data, we had initial jobless claims drop again, very low for initial jobless claims. Maybe we could do a class on that. It's not all that interesting, but just know that it was low. Dropped by 15,000, sort of signaling, well, and continuing to signal a very tight labor market, actually. So you've got the markets up above resistance. We'll hop on over to the chart, show you what that looks like. However, at the end of the day, we did pull back. If I click this button here, that'll help us see that. I've left this sort of downtrend line here to highlight that 3,000 area resistance that people are looking at. And basically, we broke through it today. It puts the focus on new highs, all-time highs there. Now, because of the Chinese news today, the trade-sensitive areas did well, which is good. We need those in there. So tech had a decent day today, up about 0.5%. You had materials. You could use XLB if you want to look at that one. Basic materials up about 0.75%. All in all, there was no like really unbelievable sort of really strong area, but the trade sensitive areas, consumer discretionary, of course, as well. They just had good days. They're all nearing highs as well. The weakness came in the oil and energy space. So if we look at names like XOP, down about 2% on the day because you just had lower prices of oil. OPEC just flat out ruined that breakout, that downtrend breakout in the price of oil that we've been talking about. XLE, which would be the energy. You can use other ETFs. These are ones that come to mind, and I'm just sort of used to checking there. But they were down by about 0.5%, and the OIH, oil service stocks, also down by 1.5% today. And so all of that comes because of the low price of oil. Oil lost about 1.1% on the day, breaking back down through that known support there. So all those people that bought that, you can see them sort of slowly deciding to take the stop loss or break even, whatever it ended up being, and walking away. OPEC came out and basically said, we're going to hold off on any production cut talks until December. I believe December was what they said there. Yesterday, they helped pull back the price of oil. They warned about demand being lower and sort of threw out the idea that, hey, we all need to work together to reduce the world's oil supply because demand's just not going to be there. All right. Also, you have the value trade. We've been talking about that. That sort of move out of taking profits in the momentum stocks, putting some of that profit into the value trades to see if those would pop. That's sort of cooled off a little bit. If you look at the Russell 2000, not that it did bad today. It was up a little bit, but look, it just had this quick move over the last few days, really sharp move, very normal for this to take a break and sort of relax there. And I'd say the same thing about retail. Very, very strong move up off those lows, maybe a little too far, too fast. I always use the analogy of running up a very straight hill, just going straight uphill. You could do it for a little bit, but you're not going to last very long before you need to take a little bit of a break. So retail pulled back, and a lot of the names that we've been following in that space that have had good runs, like Tapestry, they also just took a break today. Macy's fell, I think 2%, 2.6% on the day. That one had one of the bigger moves off the bottoms there. So kind of understandable for the short-term traders to want to take their profits, and that's okay. In the growth names, it wasn't all bad news today. We've been kind of pointing out Visa and how money came out of Visa. That got a little bit of support today. You can look at MasterCard, same thing. A little bit of support, just people saying, okay, I'm more interested in a broad-based rally, maybe some index fund, passive type investing in there where they were forced to buy that. Microsoft also up 1%, take a little bit hit over the sort of short term there. So, decent recoveries in that space as well. All in all, not too bad. Gold was really active, actually. It finished up about 1/4 point, but you can see if you look closely at the day's candlestick, if you happen to follow that, during the ECB announcement there, man, the thing just shot up, but our interest rates help pull it down. All of our treasuries help pull it down because they're continuing to pull back, meaning rates are continuing to move higher. Very sharp move higher, I should mention. Very outside of a normal range there. Here's the long-term, this is the 30-year bond actually. So long-term bonds a little bit lower today. That means interest rates a little bit higher. And if you go over towards like the 10-year, if you want to look at that, also pulling back just a little bit. Got a great class for our customers in the dojo, talking about the 10-year. And not in the boring way that makes you want to fall asleep, but an interesting way that has to do with your dough. I'll show you how it actually works. So that's that one. A couple other sectors and I'll move on. You have, that's not the one I wanted. You have the healthcare stocks broke above the range there. They've been trying so hard to actually get up and going, and everything was looking pretty good. But by the end of the day today, they started taking some of that downside pressure. That helped pull the markets back just a little bit as well. So healthcare, I would continue to say, is hinting that it wants to be strong, but not enough people are really following it. It just kind of cooled off there over the last few days. So it just hasn't really convinced anybody in the really short term. Granted, we're talking short term here, but you get what I'm saying. All right, moving on here. Home builders hit new highs yet again. Just a couple points higher on the day. Not really big there. Banks and semis helped us out, just like we talked about yesterday. Just a small little rally in the banks, small little rally in semis, a little bit better in terms of the rally that it had today. Semiconductors, most of the things participating in there. I think Taiwan Semiconductor took the day off, maybe. Was that one down about 1/3%? Not too big of a deal there. And then the regional banks continuing to enjoy the higher rates, right? It helps them out a lot. So this whole spike here, you can give thanks to the higher rates there. If we look inside the markets and look at some newsworthy stocks today, Oracle was one of the sort of laggards, down about 4.25%. They reported earnings. We covered it yesterday when they announced it there. They basically missed on earnings, 81 cents a share. They lowered guidance and missed on revenue. CEO's taking a leave of absence for medical reasons. So a little bit of a concern there in the short term. Walgreens Boots Alliance, also down about the same amount, down about 4%, was downgraded today. It's had a great run off the lows, and basically the analyst said, nope, still not worth it. Still not worth it. Energy and oil names sort of lead to the downside. You can look at, if you want to look at some of them, National Oil Well and the like, just sort of your weaker names today. Marathon Oil, 3.33% to the downside. And retail as well. We talked about that already. I wrote it down twice. But Nordstrom moving a little bit lower. Some of the parts companies, Advanced Auto Parts, they've pulled back sharply. AAP, which is Advanced Auto Parts, down 2.33%. And O'Reilly Auto Parts down about 2.5% or so. So a little bit there. On the upside, there was some good stuff. LKQ, it's a parts store, auto parts. This is the opposite side of the thing there. They, hedge fund, Value Act, took a 5.2% stake in LKQ, and LKQ said, we're good with it. Come on, we can all work together. So they were pretty positive about that. Stock shot up higher. PayPal got a little bit of a recovery bounce after being one of those that got hit pretty hard, and Take-Two Interactive also recovering off those lows. Not saying it's going to start bouncing from here, just that those were some that got beaten down and recovered a little bit there. So there you have it. As far as the S&P goes, you got 68% of the stocks in the S&P 500 over the 50-day moving average. We were at 66 yesterday, 62 the day before, 60 the day before that, and 56 the day before that. If that was all confusing, I just kept lowering the numbers. So we are slowly adding more and more names, 68%. That's now a 5-day win streak in terms of adding more stocks above the 50-day moving average. It's good news. It just also lets you know that if we took a break for a while and that number cooled off, meaning the markets pulled back, you'd be okay with that. No big deal. You got 40 new 52-week highs today. You have 8 sectors representing that, and a little better representation today. There was a good couple stocks in each sector there. Very few of those stocks hit new highs and then finished strong. In fact, I only had 9 names. I come up with 9? 9 names gained 1% or more. Everything else either hit those highs and pulled back, or they hit the highs and went into the negative territory for the day. You notice how I've said that a few times now? It lets you know that some of those strong 52-week high stocks are not so strong anymore. Ready to take a little bit of a break there. All right, a couple other things, and then maybe we'll take some questions if you have them. We have Republic Services Group, RSG. We talked about that one there. Stats on that one over the next 5 days, plus about, well, it's 1.81% over the next 5 days is the average gain. Today, it only gained about 1.5% before pulling back, so it ended up today about 1%. So that's not technically perfect yet. Today's only day 1, though, so we'll continue to follow up on that one for you. Looking pretty good. The Nasdaq Composite now up 23.5% year to date. That is the leader because the S&P is only up 20.1% year to date. The Dow is up by 16.5%, and the Russell is now up better than the Dow for the first time in a long time, up 16.8% year to date. So happy to see that. Dividends that we've got coming out in some of our funds. You got Coca-Cola paying out 40 cents. You got, there you go. Coca-Cola paying out 40 cents. Altria paying out 84 cents. Merck 55 cents. OLED paying out 10 cents. And what was the other ones here? Nope, that's not for a couple days there, so still good there. And Iron Mountain, I believe, is paying out 61 cents, if that helps you there. A couple other things in the news. The budget deficit topped $1 trillion again. First time in 7 years. This will be 7 years now that that's happened. How you feel about that? Does that bother you? $1 trillion, market sitting at all-time highs, almost all-time highs. Also, Smile Direct Club, if you want to look it up, the ticker symbol is SDC. May not be available on some of the free platforms out there, but if you have a trading account or something, look up SDC. Basically, they priced at 23, which was above their range. They were thinking 19 to 22. Priced at 23, although the market said, opened at 20.55, closed at 16.67. So not a good day for Smile Direct Club. And those 2 guys that were all over TV today, they were such champs about it. They were like, we're really here for the long term, and what happens today is really just the starting point and all that. They were pretty cool about it. I'd have been like, damn! You'd have seen an anger face on me, like, man, why'd we price so high? Should have priced lower. Anyways, that's all I have for that. Yelp is in the news today. Groupon considering buying Yelp. That was just a report. I didn't see anything official there. Wall Street Journal reported that one. And Uber says, we don't care what California says. We are not going to comply with the law that requires drivers to be treated as employees. We're going to fight it. So just so you know what's going on over there. And Tailored Brands lost 30%. Did you see that? Ew. Tailored Brands missing on earnings. I believe they suspended their dividend. Did they even have like any real dividend anyways? What were they paying out? Oh, it was a pretty sizable dividend. Yeah, well, that's over. No more dividend there. Something to keep up with. Okay, if you have any questions, I'd be happy to answer them. Otherwise, I'm going to get ready for our class tonight. Tomorrow, we've got economic news. You got import prices, retail sales, both auto and ex-auto. Michigan sentiment, that's consumer sentiment, and that's likely a market mover. That one comes out later in the day. It's about 10 o'clock Eastern time. And then for the price of oil, you got the Baker Hughes rig count. That always gets a little attention as well. Harry says gold's going to break higher when the Fed cuts rates. You think they're going to cut rates there? It's all but priced in. Everybody expects them to cut a quarter of a point. I don't know. It's always an interesting one to watch. That's a good question, George. If the markets recover 100% of the time, does the national deficit really matter? There's the crowd out there that says one day it's going to matter. And our previous Treasury Secretary, remember him? I can't remember his name. He was saying that debt doesn't matter. He went on that whole spiel where he's like, it doesn't matter. We can have as much debt as we want. It doesn't actually matter. Thank God he's gone. You think the markets break out? I think we're going to go over. We're close enough, even if it takes a few days from here. We're close enough that we'll probably poke up there and get everybody excited. The focus will be on what happens when we break to highs, right? So it's hard. I can't tell you right now, but I think we do go up there and touch it, and people get to see what happens. But we'll see. We're also entering that time period now where between now and next Wednesday, remember the Fed talks next Wednesday, we'll get that rate decision. You have a lot of people that are like, okay, well, nothing new on China. Got to wait for the Fed. Maybe nothing happens in here. It's just a little bit quiet. Could be. Did you admit defeat on a 10% drop? Nope. No, sir. We have yet to have a 10% drop statistically. We're getting one. Wished it was before. Doesn't look like it's going to be in that little spot there, but we're going to get it. It's just a matter of time. My preference, by the way, is that we just get it over with. Right? I'd like to see that sell-off. Typically, about this time of the year, you get that drop, which then can either go sideways or bounce up right away. It's been bouncing right away the last couple of years, but you can typically get that little quiet zone, and then that starts the holiday excitement. And maybe we're a little early to it, but I like when the markets sell off leading into the holidays because it gives you a chance for people to, fall for all the great, everybody's selling lots of stuff, we're all spending money, and Christmas rally, or the Santa Claus rally, as they say. Maybe this year's going to be different. You guys are talking to each other. You like the idea of shorting the market? Well, aside from yesterday, the old saying is you never short a dull market, and Monday and Tuesday were definitely a dull market. The S&P moved 0.02% in 2 days. So you can see what would happen, obviously, if it shorted yesterday. Been in trouble there, but we'll see. We will see. We've got the rest of the week, and if it ends up being quiet, then we know we've got a catalyst going into next week there with the Fed. What's your opinion on GE? Direction from here fell back a little bit at the end of the day. It's had a great run, right? So if you look at what's happened over the last few days there, it's had a great run over the last week. It was up over 5%. So when you see a stock have a quick and sharp run, I want you to picture that stock running up a hill that's that steep. How often do you see a stock run up a hill that steep for any length of time? It just doesn't happen. It likes to take a little bit of a break. I think if it does take a break here, there's nothing wrong with that. And there'll be the technical traders that go, yeah, but the 50-day moving average, man, it knocked it back down. Maybe so in the short term, but it doesn't mean the end of the road for GE. See the bears creeping in there. Every day the markets breed a few more bears out there. I don't blame you. We'll see what happens. I have officially covered everything I want to cover there, so we'll wrap it up. If you're one of our customers, we changed it, right? So now you'll get the alert when I go live in the dojo, and all you have to do is just open up the dojo or click the link in your email, and it'll pop that video right up there with the chat and everything. So I hope you'll join us later. We'll talk about Nest Egg, maybe share some stories. And remember, that's my chance to really answer questions that I just can't answer here. We can talk about anything in particular if you want, or you can email me the question if you can't make it, and I can address it on that class as well. But yeah, enjoy the rest of your day. I appreciate the rest of you watching and stopping by here. We'll be back tomorrow, of course, to wrap up the week. And enjoy. See you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.